Salam sejahtera, bersama saya Naila Huda di Niaga AWANI pagi ini. Kita mulakan dengan laporan pertama. Minggu ini antara tumpuan pasaran global ada minit mesyuarat The Fed dan kadar pengangguran ekonomi terbesar dunia untuk bulan Jun. Pengumuman lain yang dinantikan pasaran adalah angka PMI China untuk bulan Jun, dan pada masa yang sama angka kes positif COVID-19 juga meningkat kepada 10 juta orang setakat pagi ini, dan kita ingin melihat bagaimana ini akan mempengaruhi pasaran dan apakah jangkaan dagangan pasaran pada minggu ini. Jadi kita bersama Ketua Penganalisis Pasaran Global Axitrade Stephen Ince secara langsung dari Bangkok. Thank you Stephen for joining me this morning, and let's start with the most obvious figure, positive cases of COVID-19, which have surpassed the 10 million mark as of today, and we are nowhere near discovering a vaccine. So how do you think the market will open today?
Yeah, it's interesting. The markets have been rather complacent at the open, almost sanguine to a great degree. I think getting supported by the cyclical, the improving cyclical economic data, especially China, come out with the industrial profits were quite good this week, and I think market continues to blueprint back to China, where the reopening narrative sort of remains solid, but really it's hard to escape the escalations in the COVID spread. You know, we have to be very, very cautious how we interpret this. Not just the fact that governments could reimpose lockdowns, but it's how consumers react. Will consumers feel safe to come back out of their houses and spend again? You know, between March and May, there was a real increase in people's tendency to save money. That sort of gave way a little bit in the beginning of June, where savings had gone down. But you know, with COVID coming back into the fold again, maybe savings go back up. People don't spend, and then you know that impacts negatively on the economy, the employment data. So we have to be very, very cognizant how consumers react, not just how the governments react to this increase in COVID.
Yes, Stephen, we're looking at positive cases in Brazil, which is increasing really fast, and we're seeing Brazil now becoming the second highest country with the positive cases of COVID-19 after the United States. Do you think this will somehow affect the market sentiments in Asia or maybe Southeast Asia?
You know, I think so morally it really does, because you factor these type of emerging countries where they're running very, very large fiscal deficits. It's difficult for them to actually put money back into the system without suffering consequences down the road. But even more damning is the healthcare situations. They're not equipped to respond like perhaps developed countries' healthcare systems, or even the healthcare systems in Asia, which are a huge step above those in Latin America. By far, it's just a huge gap. So this is where the problems are. The healthcare response might not be there strong enough, and this is where the fear sets in.
And this is just not happening in Brazil. We're seeing the same thing in the United States, where we're seeing an increase in new positive cases in the United States, and it's not slowing down anytime soon. So do you think investors are a bit on the edge, perhaps fearing that there's going to be a second shutdown in the near future?
I think you have to be cognizant of that, but the bar, you know, the economic costs of another lockdown are just enormous, and that bar is very, very high for governments to impose like type of rolling lockdowns or even widespread lockdowns. I think governments are probably going to take a sheet off of Sweden's playbook here, where they didn't really lock down that much, but they really drilled home the necessity of the social distancing. This is something we've done very well over here in Asia. You look at the countries around, although we've been exposed to COVID to a large degree, governments have really educated the people very well and really drilled home the fact you've got to wear masks, you've got to wash your hands. This isn't really complicated stuff. It's not that difficult. I just don't understand the anti-mask rhetoric that's going on globally. It just doesn't make any sense. Putting on a mask isn't really that bad. I mean, especially the fact that it's going to curb COVID. I think this is how we're going to be reacting to this second outbreak, not through draconian lockdown measures, but better education, having people really social distance to a larger degree.
Right, Stephen, now we want to get on to the meat of the issue. Two key announcements this week. We're looking at the FOMC minute and also the unemployment rate for June. What are investors looking for in these two announcements, and what do you think the reality will be?
Yeah, this data inflection points dovetail perfectly with the running narrative right now. I think, given the outside focus on COVID, obviously the FOMC minutes are going to be drilled down to see if the Feds are going to continue adding more to the punch bowl. Been a lot of discussions in central bank circles over the past week. There's going to sort of pull back a little bit from adding more money to the system, just waiting to see how things are operating. We start to see that from the Feds, but the Feds' reduction in balance sheet was more about reserve, pulling back in FX reserves. I don't think central banks around the world need those reserves right now, so that could be misinterpreted as a pullback. However, getting over to the granddaddy of them all, the non-farm payroll data, that's really the big daddy of them all this week, really, because the markets are going to be incredibly focused on how the U.S. economy is being viewed through the lens of U.S. unemployment. That's a big number. I think the key factor we're going to be looking at is the differentiation between part-time and full-time jobs. Which ones are more responsive? Obviously, if we have an increase in part-time jobs, that's not going to be great. I think the market's going to take a better inflection if full-time jobs come back to the fray. So this is where most of the market focus will be on, rather than the headline noise itself.
Stephen, aside from the sentiments attributed to COVID-19, as we discussed earlier, do you think investors are still optimistic when it comes to data from the first half of 2020, or are they already a bit forward-looking and hoping for a better third quarter already?
You know, they are forward-looking. I mean, there's a lot of optimism in the price right now, and that could perhaps be a little bit scary if we do, reach a super spreader point where the governments have to lock down. We're not at that point yet, so we have to be very cognizant about how the epi curve actually moves. Remember, we've got this incredulous amounts of stimulus that's backing this economic recovery. So the thought is still that once all systems are go, and that there's sort of another flattening of this curve, which I do firmly believe will eventually happen. There'll be a huge tailwind from this policy stimulus. It's going to really propel itself into virtually every asset class globally, stocks, commodities, you name it. Things will probably lift off. But it's very, very difficult, to actually pick a time when this is going to happen. I don't expect the economies globally to ever fully recover or even, get back to 90% well into 2022. So it's not like we're going to light up next week or the end of the year. It's going to be an arduous task, and it's going to be filled with a lot of potholes. And provided COVID-19 remains in the headlines, I think those potholes actually form into craters. So we have to be very careful how we position ourselves going forward.
Stephen, do you think that there could possibly be a gap between where Southeast Asia is at right now and as to where America is at? Because we're looking at, coming into the recovery phase of the pandemic. Southeast Asia is thinking of developing these green lanes or green zones, travel bubbles and whatnot. But the United States, Latin America is still very much battling the peak of the global pandemic. So do you think that there's this sort of gap, a disconnect?
I think we're going to see a total differentiation between even Europe, U.S., and Asian markets. I think Asian markets are going to benefit from what I'm looking at as a divergence in the COVID narrative. Basically, I think the local governments I mentioned earlier did a better job at containing the virus than perhaps what Europe and the U.S. did. Definitely the U.S. The Europe is still a bit of a question mark because the resurgence hasn't happened that greatly there, so we have to keep an eye on that. But I really like the narrative here in Asia right now. We're starting to see lights turn back on in China. The numbers are starting to play out. I expect more of those numbers to start playing out, especially around regional export sectors. I think we're going to see more of an isolation approach. I think we're going to get better communication, better export links between local countries. And I think this is going to carry us through the early stages of the recovery. So I'm very optimistic on Asia risk at the moment.
Right, now we want to move on to the Caixin PMI for China, which will be announced on the 1st of July. Will China continue to register a steady growth? What do you think?
I really think so, but a lot really boils down to how these purchasing managers perceive consumer behavior. Really, at the end of the day, it really comes down to the consumer's appetite, whether they're buying. I think signs are starting to come back. We did have that little scare in Beijing that might hamper. But the scare I'm referring to was the escalation in COVID resurgence. That might hamper the PMIs a little bit, but I think the purchasing managers will see through that quite convincingly because that lockdown was contained very rapidly. And that's what we're expecting. We've got great track and trace mechanisms here in Asia. We expect these lockdowns to get contained quite quickly. Look, it would be crazy not to expect a resurgence in COVID once people start integrating with one another. It's bound to happen. It's just how we contain those measures and how people adapt to social distancing for the next year or two is really going to really be the way we're going to beat this in the absence of a vaccine. That is, obviously we have a vaccine comes in and is made available around the world. That's going to be the ultimate game changer in the overall narrative.
Right, Stephen, and just before we wrap up, how do you think markets in Asia and Southeast Asia will react to this?
I think things are going into quarter-end rebalancing period right now, and I think we have to probably take a step back to risk. I think there's going to be a lot of position juggle, so today's probably not the greatest day. I think we're going to have to monitor the COVID case count, not only in the U.S., but globally. If it continues to stay at current levels, I feel rather optimistic. If this thing mushrooms higher, I think I'm just going to throw any bullish semblance out the window. So I think give us about another 48 hours to track the epi curve globally with a big focus on U.S. And then I think if that starts to flatten, I think risk comes back gradually for the remainder of the week.
Right. Thank you so much for joining me, Stephen Ince, and for your insight looking at several issues, the PMI and a few of the things to look out for this week. Terima kasih kepada Ketua Penganalisis Pasaran Global Axi Trade, Stephen Ince, untuk perkongsian itu, dan Niaga Awani akan berhenti rehat seketika kembali selepas ini.